Oh man, so the excitement lasted all but one day with Bitcoin failing to break through 24,000, but more importantly, the fun now begins on what could possibly be worse than Terra Luna. Yes, MakerDao finds itself in a bit of a pickle. We need to unpick what is going on and some of the consequences that could occur from any potential issue with that. As you guys know, we covered off case by case the Terra Luna collapse, and we picked out before it was collapsing, and as it was unwinding, we were one of the first to pick it off and cover it on a day-to-day basis. We would do the same here with MakerDao. Hopefully nothing comes of this, but it's important that we understand exactly what's going on and how to navigate it. From Bitcoin's perspective, as you can see here in the charts, we struggled to break the 24,000 level, and as you can see, I'm going to play you a quick clip from yesterday, what we're looking to trade. Now please be careful, guys. Yes, we have the daily candle now above, right? I just want to show you this. Yes, we have this daily candle now above the yellow line, which is 24,000. That is great, but look at the wicks, right? You can see we did indeed wick higher than the previous high, the 24,700 level we're talking about. We got that level, we wicked above it. But I don't want to be fussy, but I do want to see a body candle. I want to see the body above that wick, right? So I just need that body to come back above it, and even a daily close. But this is good. Let's keep this daily close. Let's make sure the bears don't send us back down. They did that here, right? The bears later in the day sent us back down and turned that candle red. So we don't want to see that happen today. We want to see us close like this, close with a nice body above, and that is really good. Even better is if that body closes above 24,700 today. That would be a really good day's worth of work today. Then you want to see your confirmation candle tomorrow, and this sets you up for a really big trade here on the daily. Now, of course, a lot of people are already in the trade. You can FOMO into the trade. That's absolutely fine. What I'm showing you here is the textbook way of doing it, and you wait for the daily candle confirmation. The reason you do that is because of candles like this. This was a fake out. This was a fake out. This was a fake out. You had 3 fake outs in a row. So loads of people FOMO'd into there, and the sell orders just trigger your stop losses, and you get thrown out of the position, okay? So that's why from a textbook perspective, you wait for the daily candle to close, because it looks amazing like this, right? Everybody wants to enter this trade. It looks, even the green on the chart has a psychological response, a hormonal response where you just want to go and trade. The dopamine hits. But the reality is you need to wait, because all of these 3 candles which I've pointed out here, all 3 of these candles look like this at one point during the day and then was thrown back down. So do wait for that. And as you can see, what I kept saying was it's not done until we close the candle. And I know I was being fussy. I know I was following the textbooks, but when other channels aren't, I have to give you the reality of what's going on. We had 3 wicks below, closing back below 24, and in the end, it wasn't a surprise that a lack of volume and a lack of strength yesterday mean again we failed to break through that 24,000 mark, and it gets you a little bit worried, right? I still think we need to wait for this break of 24, and we've got a great trade, but we have to ask ourselves, why can we not break that 24,000 yet? We had the BlackRock news yesterday, which was huge. We covered that here on the channel, breaking news literally as it happened. Also, we had the CPI reading, huge beat from both producer price index and the core price, right? So insane macroeconomic news. Bitcoin was not even running as fast as the macroeconomy, and we're going to cover that off as well. So loads to go through here today. Make sure you smash the like button. Don't forget to subscribe. And obviously, the main news I want to kick off with is what's going on with MakerDao. And MakerDao founder Rune Christensen came out and said he's considering the sale of a portion of DAI's USDC backing for Ethereum. Now, let's take a step back, and the first thing we need to understand is what is DAI. DAI is a stable coin which is backed as collateral with other crypto. So in other words, DAI currently has a market cap of $7.5 billion, okay? And it's one of the largest DeFi protocols based on total value locked. It's collateralized currently by about 34, these percentages change, but about 34% USDC, which we're going to come on to is important, 23% roughly ETH, 7.6 wrap BTC, and then there's some other assets as well. So this is a big issue. They've got at least over $3 billion of USDC backing their stablecoin, and what they then ran into was an issue with the sanctions. So you remember we covered this off. The SEC decided to regulate a bunch of transactions to do, they've sanctioned Tornado Cash, and they're sanctioning wallets linked to it, which included a bunch of USDC wallets. The sanctions are a lot more serious than I first thought. We should seriously consider preparing to depeg from USD, uprooting, which is what I call the YOLO USDC into ETH approach. In other words, he is worried that since some DAI users interacted with Tornado Cash, they did so through something called the USDC PSM, which is how they basically keep the stability of their peg for DAI and USDC. And they said that if the contract becomes implicated in this case to do with the sanctions, this could be a big problem for DAI, and it could collapse not just MakerDao and DAI, but the DeFi market with contagion. We saw the effect that can have with Terra Luna. But it gets worse. And this is the way it gets a little bit scary, because shout out to Banteg, who's one of the first to tweet this out. MakerDao is considering a $3.5 billion ETH market buy, converting all USDC from the PEG stability module into ETH. So now what they're saying is, okay, we want to move from USDC. And by the way, before I get into this, I want to play a clip, because in the video where I made a video breaking down the difference between all the current available decent stablecoins, here's what I said about MakerDao. And then you've got DAI, which it is 100% collateralized. We can see it on the blockchain. But how are you going to back something which is supposed to be stable with some of the riskiest assets known to mankind in terms of altcoins? So that's a little bit of a tricky one for me, particularly given what's happened with Terra Luna. And that was a red flag for me with Terra Luna as well. When they backed it with Bitcoin, that was one thing. I was a bit, okay, fine. But then they started backing their reserves with Avalanche and other coins, and that left me feeling a little bit worried as well. So as you can see, I always had qualms with the fact that you've got a stable coin backed by other stable coins and non-stable coins in terms of the most volatile cryptos, right, is insane. So it's backed by ETH, it's backed by wrapped Bitcoin, so Bitcoin and other assets, and then the stable portion was USDC, which many could argue is not stable in itself, right, because you have to look at what that's backed by. So it's crazy, and it's always kind of raised a flag with me, which is why I mentioned that in the video many weeks back. And as you can see, what they're trying to do now is make it even more volatile. They want to sell $3.5 billion of the USDC and push it into ETH. And I don't think they're doing this because they think ETH is more stable than USDC. They're just worried if they get sanctioned and it gets locked, 3.5 billion of backing is gone, right? And that would be huge. So they've got to do something, and their answer was to go buy some ETH. Now, the issue with that is that would make them one of the biggest holders of ETH. I mean, if you go down the list, you can see the biggest holders of ETH is obviously locked in the ETH 2.0 contract. Then you got the exchanges, Kraken, Binance, but it would put them up there with a $3.5 billion purchase. That would be huge. But Vitalik Buterin weighed in on this and said it wasn't a good idea. Vitalik tweeted that this is not a good idea and can lead to a collapse. And he's absolutely right, right? ETH is a volatile asset. It is a crypto at the end of the day. So ETH could collapse. It could bring down not just the MakerDao project and DAI. It can bring down ETH, because then you've got a player in MakerDao who's dumping $3.5 billion of Ethereum onto the market. That would be insane. That could collapse the market. So this is really worrying. And again, just testament to the same old things causing the same old problems, right? I'm going to sound like a stock record, but when I see things like misallocation of collateralization, I don't like it. When I see rehypothecation, I don't like it. When I see overpriced yields without any real backing, I don't like it. These are the same things. Greed, I don't like it, right? Over leveraged, I don't like it, right? And it sounds boring or sobering, hopefully, to many of you, but these are the things that ultimately lead to it. And the reason I feel this way is not because, oh, I'm so moral. I've just seen it before in traditional finance. I've seen it happen. I've studied it. I've seen the financial crashes, and I understand that these were the same traits which we're showing in modern crypto, the solution to traditional finance. That's really frustrating to see. So enough about that for now. We've also got Huobi in a bit of a problem at the moment. Crypto entrepreneurs Bankman-Fried, of course, as well as Justin Sun, looking to buy majority of Huobi in what could be one of the biggest deals in the crypto industry. So that's interesting to keep an eye on that. Let's also take a look at the Fed rate monitor tool, and you can see the markets are pricing in quite comfortably now just a 50 basis point rate hike. So that's why we're seeing a little bit of green in the markets, because markets are unwinding where half of them were pricing in 75 basis points. The market is very confident given the weaker CPI data that Jerome Powell on September the 21st will only need to rate hike by 50 basis points. Also, taking a look at the Fear and Greed Index, 42. This was yesterday when there was a bunch of euphoria into the market. We have to be a bit more practical right now and see what is happening. You see Friday markets up slightly here, 0.45 in the NASDAQ, S&P up 0.4, Dow Jones 0.37. But overall, it's been a good week. Good week back with good macroeconomic data. The only question is when we come back to the Bitcoin chart, when are we going to see this breakthrough 24,000? Now that we've failed there, I'm going to look at the EMA ribbon as some support, right? We may need to come into our EMA ribbon even down to kind of like 23,000 range. I think coming all the way down to the trend line will be a little bit of a stretch. I think hopefully we can create a higher low from this low. You see here when we fell this time, when we got rejected, we didn't need to come all the way to the trend line at 22. We showed some good strength coming in early. Then we had this day, which was the CPI day, and now we're coming back down. So are we going to come back down to 22, 23 range? Even technically, if we come down to this trend line, that's fine, as long as we maintain this triangle pattern, so we can stay in this triangle and come towards some sort of an apex. Then we still have hope of breaking to the upside. My risk to the downside continues to be the fact that we could end up in the channel again, okay? That's what I want to watch, is I don't want to enter back into this green channel. Let me just tidy this up so I can show you. Let's just pop, I don't know why I'm doing a trend line. Let's delete that. Let's also pop that out of the way, and let's remove our EMA ribbon. There you go. In that green line between 22,000 here and 18,700. I'm just worried we may come back into this channel. So that's what I'm preparing for. If we break through 24, great. The rally is still on. Price target up towards 29,000, 30,000. I'm still up for that relief rally. But at the moment, let's not disrespect the bears. The bears are in control. I've brought out the volume profile range before to show you this is a hugely traded volume, and the bears are not letting go quietly. But once we break this level, I think there'll be a huge impulsive move as the bears capitulate, and we can run towards the next resistance area up towards the 29, 30,000 region. So there you have it, guys. Lots to watch out for in this market. A little bit of FUD creeping back into the market here on a Friday. We'll keep an eye on the MakerDao situation and give you updates as and when required. If you're on Bitcoin, if you're holding for the long term, you're just dollar cost averaging, you're just hodling. If you're trading this move, like I said, be very, very patient for the breakout. Wait for confirmation, like I've said many, many times, 4 or 5 times. If you've been following the what I've been sharing on this channel, you would have been saved from getting liquidated and capitulated there, taking a long too early. So be careful, follow the textbook patterns, wait for a confirmation, look for volume on the breakouts, and then trade safely with amount you're willing to lose. Links in the description to BYBIT and BitGet. Check those channels, check those links out. They do support the channel. They are affiliate links. So if you do not want to support the channel, do not use them. Go to their website directly. Thanks for watching, guys, and I'll see you in the next one.